Welcome to the Travelex Weekly Outlook. It's the last week of June, and the dollar is off to a mixed start. We have seen the U.S. currency give back some of its recent gains against the single currency, but the dollar right now is actually in an up climb against most of its other rivals, particularly the commodity-backed Australian and Canadian currencies. This is as oil prices continue to hover around 4-month lows. So that is giving a boost to the U.S. currency. But last week, we did see the dollar ride a safe haven rally to 1-week highs against a basket of its major trading partners. This came as investors sought some refuge from Greece's debt crisis. Greece's debt crisis last week and in the previous week, we did see the single currency endure somewhat of an emotional roller coaster. At one point, the euro had gotten a nice boost ahead of a vote of confidence by the Greek parliament, but it since started to come under further pressure, and this is after the parliament has more obstacles ahead. And so with that in mind, investors really decided to distance themselves from the single currency as the week wore on. But for the dollar, as I mentioned, its gains have really been one-dimensional. That means that its latest rally has really been safe haven inspired. Until we see any type of improving U.S. economic fundamentals, the dollar might have a tough time enjoying any longer-term gains. That's until we see the U.S. economy take a turn for the better. For example, we're going to want to see an improvement in the U.S. labor market conditions on the job front in particular. For one, now with the U.S. jobless rate hovering above 9%, that is unlikely to compel Fed officials to boost rates anytime soon. So until we see that jobless rate move lower, come in well below 8%, that is not expected for a long time from now. But until that happens, that is unlikely to result in any type of meaningful gains for the U.S. currency. But for the euro, all eyes this week are going to be on the Greek parliament. That's when they meet this week to take up some of these tough austerity measures. Greece is expected to pass those measures sometime this week, particularly or perhaps around Wednesday. If they do, that could be Athens' ticket to a next round of aid from its European neighbors and from the IMF. If that happens, we could see the euro breathe somewhat of a meaningful sigh of relief, as such a scenario would tend to ease concerns about an imminent risk of a debt default by Athens. So that is something to watch for. But in the coming week, investors will really get a better gauge of the health of U.S. consumers. This week on the U.S. economy, we'll get readings on U.S. consumer spending as well as personal income. On Tuesday, we'll get data on consumer confidence. And then we'll jump to Friday. That's when we'll get the latest on U.S. household sentiment from the University of Michigan. But for the time being, we do have the dollar. It is mixed. It is down a little bit against the single currency in the run-up to that austerity vote by midweek, but it is faring better against most of its other rivals. But for the latest on the dollar, feel free to check us out online.